Oh, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne. He is the founder and editor of the Daily Gold. And Jordan, it's a good day for us to be talking because we are seeing some money flow into the precious metals, also oil, but we're going to focus on the precious metals here. Gold is up about $16. It has come back a little bit off its high of right around $13.64. Silver is also up 20 cents. So a nice move, and even more importantly, seeing the stocks and the ETFs that follow some of these stocks like GDX and GDXJ, those are up almost 2.5% each. So a good day so far. Again, some of it, though, being on the back of war fears. How do you balance out the move that we're seeing today and the news, or at least some more fear about war?
Well, I'm not that, as I told you as we were talking here before we went on air, I'm not that concerned that it's attributed to war. I'm really not that concerned about what it's attributed to. I mean, sometimes I am, but the reason I'm not now, Corey, is if you look at the technical structure of gold, it's just a very bullish looking chart. I mean, gold has, if we go back to last summer, it rallied up to 1360. Then it corrected down in December. And then at the beginning of this year, gold was able to rally all the way back to 1360. So we kind of, in a short-term sense, just going back over the last 9-10 months, I mean, gold is setting up a cup and handle pattern. And it's been building the handle since the beginning of this year. And it had that sharp recovery back to 1360 just in this during winter, as I said. And after that, gold has been able to hold above 1300. It looks like about 3 times or so it tested 1310. Actually, you could say it tested 1310 about 5 times since this year, and it's rebounded off that mark successfully every time. And if we just go back to the last month or so, gold did look like it went as low as 1310, but it rallied back up to 1355 or so. And since then, it's consolidated in a bullish manner. It's held above 1325 2 or 3 different times. So the trading is getting tighter and tighter, but gold has maintained during that trading. Gold has maintained the levels above 1300 and recently above 1330. And it's just, look, markets are supply and demand. You have buyers and sellers going back and forth, and buyers, it looks like they really have the upper hand. And just looking at this chart, it really looks like it's only a matter of time before gold is really going to break out. You know, tomorrow or the day after that, maybe it could close above 1360, which would be very significant. And then, of course, closing above 1370 or 75, whatever it is, I mean, that will be a major move higher. So I just think the structure of the market, Corey, leading up to this point is just very bullish, that it really doesn't matter to me what puts it over the top. I mean, there's other factors here that I know we'll discuss that look good. So whether it's war fears or, you know, some policymaker said something, I mean, it really doesn't matter. It's the overall structure of the market looks very bullish here. And I mean, any number of things here could push it to a breakout in the next week or two.
And I think just looking at the charts is something that you and I have talked about on a regular basis, of how constructive these charts have been and the consistent higher lows that they've been putting in. We just haven't seen that breakout yet, and today came close to breaking out but didn't exactly follow through, at least yet. Let's talk about one thing that you and I touch on regularly is gold versus foreign currencies. We constantly look at gold versus the US dollar, and that performance has been very good recently considering the, weakness in the dollar. But gold versus foreign currencies has been unable to break out. It's actually been in a downtrend. It's starting to break that downtrend, though, now, isn't it?
Yeah, if you go back to last May or thereabouts, there's been a slight downtrend. And if you go back a little further than that, you can draw trend lines on both sides. You can draw one from the lows and then one going back to last May. And gold against foreign currencies is not quite at its 2016 high like gold. And as we've discussed here in recent months, gold against foreign currencies has been weaker than gold. The gold market has held up well over the last year to 18 months thanks to the weak dollar and the huge move down it's had. However, gold has not broken out yet, Corey, because gold against foreign currencies has been weak, but that's slowly picked up, and I mentioned something to my subscribers in the last weekend update. I said that this is one of the significant things because last week we saw gold against foreign currencies rally up to the resistance. And I mean, it's just come up to that resistance numerous times that it looks like it's only a matter of time that it's going to break. And today that has broken above that resistance. And I would not be surprised if tomorrow, to follow that up, you see gold break above the 1360 resistance in U.S. dollars. And Corey, I mean, we've talked about it so much, but I love looking at gold against foreign currencies and gold against the stock market because that's telling us how strong is gold in real terms. I mean, what we've had over the last year, I mean, a lot of people have said, rent a bull market, rent a bull market. I mean, it's funny because we haven't really been in a bull market because gold has not made a new high for almost 2 years, yet various analysts and newsletter writers have had to try and convince everybody gold's been in a bull market, but it hasn't really until it takes out that 2016 high. Now that gold has broken out against foreign currencies, looks like it should get some upside momentum there. In addition to holding up really well against the stock market, it broke the downtrend line there in the last several weeks, and it's holding those gains. So the gold is in position now to really be strong in real terms, and that's why it's probably going to break out here and then sustain the move. Those elements, as far as gold being strong in real terms, we didn't have that over the last year, over the last 6 or 9 months during the many tests that gold has had at 1360.
Okay, so things are, again, starting to line up more and more so that we can get more positive about a breakout potentially happening. Let's also talk about what the stocks are doing. As I said, GDX, GDXJ, those are both up and still holding most of their gains at right around 2.5%. How encouraging is it for you to see the stocks start to move up, considering they've been relatively depressed over the last about 9 weeks, I think it is?
Yeah, what's interesting, and I was noticing this over the last couple of days, is, I mean, even if you're looking at GDX, I mean, it's tested similar to how gold has held above 1,300 numerous times. GDX has held above 21 numerous times. And just going back to last December, it had a really good bounce off 21, rallied up to about 24.5. It came all the way back down, and since the end of February, GDX has tested 21 a handful of times, and it's really been doing nothing, for lack of a better term. Yet, while it's been doing nothing, Corey, it's been holding support. It hasn't been breaking lower. And so just over the last couple of weeks at GDX, and same thing with GDXJ, they've just been quietly starting to move a little bit to the upside, a step forward, a step back, that type movement, but while holding support. And in the last couple of days, we saw a little more strength in the miners, and today they're finally reacting in the manner we like to see. And looking at my charts, there is some resistance at GDXJ 34 and GDX 23. But one positive thing today, we're seeing both of the ETFs. They've rallied above their 200-day moving averages, which are relatively flat. And so it would be a good sign to see these miners really explode through those resistance points, which again are about 23 GDX and 34 GDXJ. If gold's going to break out here in the next day or two, I bet we would see these miners really explode well above that resistance. Because in a strong market, when you're breaking out, you should really take out resistance targets, at least early in the move. I mean, resistance should not hold in the very short term. And then the next resistance targets, assuming that we're able to break those levels, that I would be looking at would be for GDX, would be the January high around 24.5, and then for GDXJ, also the January high, just below 36. So, assuming we're going to break out here in gold, those would be my short-term targets for miners. It looks very constructive, and look, if gold's going to break out here and get to 1,400 and have a really strong second half of the year, the miners are really going to reflect that because the miners, sometimes they lag so often, but then when you start to see the metals breaking key resistance levels and they're breaking out, that's when the miners start to outperform gold substantially. And so that's something that we should look for, assuming gold is going to break out and run to 1,400 in the short term. We should look for some really strong moves in the miners and buying to really pick up here.
Okay, and hey, these stocks, especially GDX and GDXJ, have traded in such a tight range for well over a year now that these higher levels really are not that far off. Any sort of a significant break can garner a lot more interest into this sector because I think there's a lot of money waiting for that break to happen. Let's also talk about silver. There's been a lot of eyes on silver recently thanks to the COT reports. But what you mentioned to me off mic is that you're starting to see some of the silver stocks actually start to move, which gives you even more optimism moving forward.
Yes, I mean, very quietly over the last week or two, I've noticed that most of the silver stocks that I own have moved up really well. I mean, the only one that hasn't, I'm not going to mention the name, but it looks like they're going to do a financing, and they haven't done it yet, and so the stock's been pressured. But anyway, for the most part, the silver stocks that I own have a couple of them have really started to just quietly over the last couple weeks. They've really started to move and break to the upside, I guess, before the sector, you could say. Looking at the COT, I mean, it's been no secret the net speculative position last week came in at an all-time low. It was even lower than where it was 2 weeks ago. 2 weeks ago, it was at 1.7% of open interest. Last week, it came in at 1.1% of open interest, and that's basically an all-time low. We have data back to 1987. And in addition to that, Corey, open interest was at an all-time high. So that's very powerful when open interest is that high and the net speculative position is stretched in a certain direction. I went back and I looked at where points when the open interest is at an all-time high and the net speculative position is really low. And there's not too many of those points, and they don't scream super bullish to me per se, but there was one in 1995, and silver had a really sharp short-term rebound there. Another time in 2005 when silver had a major breakout. And then in 2015, we had a similar reading, but silver did not really move aggressively for 4 months. But then it had a massive move, as we all know. So what I was saying last week is it's certainly a very bullish setup for silver, but I don't know if it's going to make a huge move, if that's going to happen immediately or if it's going to take 3 or 4 months. I still don't know what to say. I mean, I don't know what to predict on that. You never know when these things are going to unwind. But yeah, speaking of unwinding, so we look at the net speculative position as basically that's everyone outside of the commercials. Now, a lot of other analysts just look at what hedge funds are doing, the managed money category, which is a subset of the net, it's a subset of the speculator category. And hedge funds, I guess, are at like a record. Well, I haven't looked at it exactly. I mean, it's just what I'm hearing. But hedge funds are at a significant record short position. So that's going to have to be unwound. And again, with open interest at an all-time high, that shows you there's a lot of unwinding to do in the people that are short silver. So that's giving silver a lot of fuel. But in the event, Corey, I mean, it looks really good for the sector. I mean, you see the net speculative. I mean, we've been consolidating for a while in silver, and to see the net speculative position at an all-time low, it's quite amazing, to be honest. I'm really surprised. I never thought we'd see that after the readings we saw in 2013, 2014, and 2015. But it's just another thing that looks really bullish for the sector. And as you said, the silver stocks, at least some of them, have been sniffing out this move in silver over the last couple weeks. So set up in silver, another very good sign for the sector.
Yeah, it seems like a lot of stuff is, again, lining up for this breakout to happen, but it almost feels like we've been disappointed so many times that it's understandable people are waiting for that breakout to happen. But hey, Jordan, you follow precious metals in a lot of different senses, and I think that your comments are very valuable, but leave us with a quick comment. Do you think this will be the breakout that we've all been waiting for, or yet another disappointment?
Well, I mean, I think it will be. I just go back to what we said in the first question, where the structure of the gold market, it's going to be really difficult for bears to stop gold from breaking out here. It may not break out immediately over the next couple of days. Maybe it pulls back again or consolidates for another week or two. But I think the evidence really is favoring the bulls here, and that we will see a breakout in the short term. it's surprising given the failed quarterly breakout that we had just a couple weeks ago. But gold's coming right back to make another attempt, and I don't think the bears are going to stop it. And Corey, whether it breaks out tomorrow or 2 months from now or 3 months from now, I mean, we can't predict that. But given everything that's been setting up, I mean, this is why you don't want to try and time the market. I've been writing about this in recent months, just try and accumulate things, buy at good prices. We've been talking about this, Corey, in recent weeks over and over again. Just find good stocks, accumulate them at reasonable prices, and because this market is going to break out eventually. And look, it looks like it's probably going to break out now sooner than I expected, but I was accumulating things, telling subscribers to accumulate things ahead of this breakout, because you can't pinpoint exactly when the breakout's going to come. When you're close enough as we have been, and the stocks are trading at great values, that's the time when you really have to get in there and accumulate, because Warren Buffett says you don't want to, it's fine to be years early, but you don't want to be a day or two late. So those who accumulated stocks in recent weeks and months, I think they're going to be very happy here over the next couple months.
Okay, and I think that's the biggest takeaway, even something similar to what I was chatting with our good friend David Erfley about, is that you do need to be invested in a lot of these stocks that you like, because when the breakout comes, it can come very quickly. Jordan, great chatting with you. Have a great rest of your day, my friend.